Crypto market right now is grinding higher, and inside the same market, you see this. Both with a lot of followers, one bullish and one bearish. Before you make the final judgment for your portfolio, you definitely will have to look at what's happening in the macro environment. Then you will have to see what this pattern means. If this pattern you understand correctly, that's not actually positive for that structure. Now, if you come back to the crypto market and ask the question like, okay, right now, this is what Bitcoin is doing. The possibility is that you're going to test 30,000. This is what the Ether is doing. You're making this particular pattern, which just seems to be the opposite of this one. Great. Now, if you are in crypto and you're asking like, okay, can that be valid? It's not the proper traditional inverse head and shoulder. It's declining. The trend line is declining. Can that be possible? Right? That's going to be a huge question. But then we'll have to go back to history and see how these assets played out. They also had similar pattern. This is just a daily chart. And then we know what happened afterwards. Yes, the measured move was actually all the way down, but it was not meant to go this long. So when the market capitulates and your driver, the project leaders, if they're not strong, this is what's going to happen. Measured move was only till here, but there was no proper management. It went all the way down. So now you see like, okay, A, B, and C, that's huge correction. Is that just one project? No. This is a familiar coin for a lot of us. We've talked about this before, and how things evolve is crazy, right? Now you look at the general market, you see this is the altcoin market before we started breaking to the downside. So now you're sitting at a point asking like, okay, if Ether is going to bounce back up, how will the market look like? That's going to be great. Then you're here looking at XRP saying, okay, it does actually show us a possibility that this asset can run higher. But in the same chart, you will see a different possibility where you can still go down a little bit before you run back up. How does that odd look like? We are going to break that through. This is the scientific investor family, where the normal common retail guys learn how to become the next top 10% of the world. As we look at the market, I would also like to highlight that I've started a new channel. Now, yes, it's only one video which has been uploaded today, and there is a lot of room for improvement. But I would like to request you guys to actually listen to that and give your suggestions. That would really be appreciated. Now, when we go back looking at the market, guys, this is really serious because not a lot of people will ask the question in different ways. Yes, the price is slowing down at a time when the RSI is hitting the resistance and slowing. But what's more important here to consider is the MACD is crossing to the upside on a daily. So MACD is saying, I'm bullish, I'm staying in the positive territory, and I'm breaking to the upside. At a time when the RSI is at the resistance, it's slowing down. So if the RSI breaks higher, then what happens? RSI joins the MACD in that rally. But again, the price need to break through this range. So can it be possible? So that's the bullish positive side of it. And this one too. But then you remove this one and it's easy for you to actually see, okay, this is a possibility where you can say, okay, this is a shoulder, which we have seen in a lot of different crypto assets, and this is the head. In that case, you may actually be able to see something like this. If that turns out to be true, that's just one end. Now, if it's like, not asymmetrical stuff and it's going to do as crazy as XRP usually does, then it won't be like that because we have already done this structure here. And then like this, now this is no way close to the real structure which we get for head and shoulder or inverse head and shoulder. That's why I showed the initial stuff. But right now, a lot of crypto assets are showing you that it's breaking through a Wyckoff structure. Now, what does that actually mean? Because when you go back to XRP, this is a weekly chart. You can go on a shorter time frame chart, and you will also agree on the point that this level has been broken. We are now trying to slowly grind higher. If we zoom in and look at the moving averages, now the 20-day moving average and the 50-day moving average is close enough, or 20 is crossing the 50 to the downside, right? So when we see these kind of stuff, you are now at a point where you're like, okay, am I bullish? Am I bearish? I really don't understand. 3-day, it's really bullish. If you have that time frame, it's looking really great. The RSI is moving to the upside. MACD is crossing back to the upside. So that was like a fake out. MACD suggests it crossed to the downside, but right now it's going back up, crossing to the upside, showing that first cross to the downside was a fake out. We don't know how many bears are going to get trapped, but we do understand when it crosses and start a new move, it does move higher in price. In accumulation zone, we know the moves are limited, but after that, it has room to do things like this. But short term is what most of people are actually looking at. And then this one becomes really important. You go on a 2-hour chart, you go on a hourly chart, and then you ask like, okay, what's my RSI doing? It's slowing down. What's my moving average, the closest one, doing? It's slowing down. So you do see a possibility on an hourly chart to be inside this pattern. And if you break to the downside, yes, you are going to correct back down. Then you're like, okay, no, I'm not that zoomed in. I'm not looking at that kind of a scenario. Then you come on a 4-hour chart. That shows you this. The 20-day moving average has crossed the 50, which is bullish. And then it's crossing the 200 moving average right now. That usually is a bullish sign. That's a good sign. But it does not show you that it won't come lower. Even when that's happening on a higher time frame, you can note that the 20-day moving average is crossing the 50 to the upside. And we have always noted that when these kind of stuff happen, the price action kind of confuses you. This was like a death cross on a short term, right? The 20 crosses the 50. Usually we look for the 50 and 200, but here it's the 20 crossing 50 to the downside. At that time, what happens? The price bounces back up, testing the first moving average. So if that happens, the 20-day moving average is climbing fast to the upside, and the price can come retest that and bounce. Now, will that be too bad? That's the other big question, because a lot of people who are looking at this asking the question that how low can we come? I don't think 0.47, 0.46, 0.45, that range is going to hurt a lot of people. This most likely is not going to hurt a lot of us. The structure is not that bad. Then you're zooming out. Then you're coming here and asking like, okay, we thought like we are going to come all the way down to 0.4. We didn't. That's an important thing to actually see, because on a 12-hour chart, this is what you're observing. You broke higher, you're still above that. So if you get a retest and bounce here, now you're not looking for the price to come all the way back down. Because if the RSI is bouncing, that will show you that the price is also going to go higher. But on a short term, yes, we are looking for the price to come back a little bit down. Now from here, being an XRP, you already know how volatile it is, and 5, 6, 7 or even 10% move is not a big deal, because we have seen worse. So that's not a big deal. Now you go on a monthly. That's what long-term thinkers are looking at. And at this point, you're saying, okay, my MACD is showing it's slowing down, closing that mouth. You know what happened here when you were going to that one. Fine. And then the monthly shows you like it's still holding on to this range which it erased. And a possible close of this month, now this month has just started. You have a long way to go. So a possible close coming all the way up to 0.6. Now from here, it's not too much, right? All the way up to 0.6 will give you a confirmation of a bullish continuation, which is now breaking through this. Now this is something which a lot of people are not talking about in my thought process, because if you are looking at a monthly chart and saying, okay, we are at a resistance and we are still being bullish on the macro, this should give you the idea where XRP is going, because This one right now goes back to the macro pattern which we discussed earlier, so I'm not going to break that down too much. This one is bullish. And if you are looking at that measured move, you are going in 2 digits in XRP. So that's your wave 2. Right now, money is coming into the market. 2 billion moving here and there and 1.72 billion going to crypto exchange. I personally think that's not really the retailers. You won't see 1.72 billion coming from retailers. These are going to be the ultra high net worth individuals or institutions piling up. Now, why would they do that? If you really think the market is actually going to drop heavily, why would they actually try and buy this asset when it's here? Because they do understand on a weekly, this is on a weekly. It's not a short-term chart. This is a macro chart showing you something just changed here. And if you listen to that, you're observing that the price is also slowly following that. So if the indicators are suggesting you that I have broken higher, I have retested, and I'm still supporting this trend line, this is actually a little bit bullish. Now, do we have that sort of volume coming into the market? No, as of now, you're not observing heavy volume. It's being distributed across a lot of different assets, not focused or concentrated in 1 or 2 assets. Market is slowly grinding up. Now, you will see corrections for sure because a lot of assets just went nuts in recent days, 50%, 100%, and there will be corrections. People will take profits. Now, if you are looking at all of these, say, take this one for random. That's Render. It had a great announcement from a big company. So keep that in mind how things are evolving there. And if you think like what we've talked about before plays out, I would argue that, okay, that did play out here. If you put that perspective here, I think this actually comes into play kind of clearly. You kind of get these 3 wave structures and you break the trend line. That's done. You're going lower. Now, what's happening, which is really interesting for me, is that you are slowly trying to bounce back up. So let me be a little bit accurate. Okay, I think we got those correctly. Now you look at the volume here. This actually does show you what you need to see. You're not seeing volume in a lot of different coins, but in some you do see that volume. Now, when we talk about these volumes, you also have to understand, like, if you are trying to pitch this correctly, as long as possible, as many touches as possible in that line, you just say like, okay, this was a wick here. Now, what does that actually give you? That's really important in my thought process. See, you get this one, then you get this one, and then this one, you break higher. Now, if that's the case, you need to ask that question like, okay, you see volume going in to one asset and that breaking higher, that's going to be really great because right now, the way it looks is like, okay, this asset is going to go nuts. Fine. We've been talking about this in the group for some time because it's not only that as an indicator. If you're going to be like, okay, I'm a Wyckoff guy, I'm going to look at it as that. And you're saying like, okay, I did not get retest to the bottom. I'm saying like, the spring is going to come. I can be wrong. Because does this happen? Yes, it does. That's a confusing question, but people do have to understand like not all the time market go back below making a spring here. You do have Wyckoff patterns without that, right? So if this is playing out, now you are seeing a change in trend. Now, is it just in one asset? No, the entire market is slowly moving back up and you will see FOMO entering in various different assets. So if you are trying to, jump like the monkey jumping between coins, it's going to hurt your portfolio. You don't actually want to do that. And then you go look at assets which, say, for example, recently pumped. This one just went up nuts, right? It was all the way back here at $1. It went to $3.6. We rode 80% of that ride. Where we felt comfortable, we took the profit and moved out. Now the question is it coming all the way back down or is this trend going to continue? Now you go on a short-term chart and you look at where the moving averages are and what the price is doing, you're breaking through. So if you are following that particular asset, now you're staying there asking, okay, I'm watching this particular pattern here, which actually shows me it's bearish and it just broke here. That's a 1 hour chart, not the macro. So your correction can be just a retest, but that retest can also be painful if you went in leveraged. So even if your macro direction is correct, say this asset going all the way up, making a new all-time highs, but you went in leveraged, that means this drop is going to kick you out. So when people sell you the idea of go leveraged, this is the time, always understand that can be super risky. And if you are leveraged, now what should you do? Look at this. This is going to be a big support when you're going to come back down, and that's 1.8. Keep your leverage as long as it is there, but push your margin as low as possible. But the issue with that is, if the price decides to go manipulated, then it comes down. Whatever happens, you push it to $1 or even below this. In that particular exchange, it wicks below that, kick you out, and then go back up. So you lose a lot of money. You don't want to do that. That's just my thought process. But when you are looking at the entire market and saying like, okay, we just broke through a long-term falling wedge, that does not actually look like a bear market. These kind of volumes coming in certain assets, you kind of get the understanding like, okay, this was something really huge. So this is a daily chart where you're zooming in and saying, okay, this did happen. The next day, the volume was even higher, but the price action was smaller. So people were taking profits. That was important to know that. Right? It is really important to know when to take profits. Otherwise, that's going to be hard. And that's why we regularly post these updates on the Patreon. So if you want to have a look at that, link of Patreon is given in the description below. You can check that out. Because right now, some of them are not really looking great, but some of them does show you the ability. Because if Ether is going to move this 1.5x, you will see a lot of altcoins doing 5, 10, 15x. Because the market cap is so small and you don't need too much money to push those assets up, and the retail FOMO gets in, that is going to come back here in the market. There is no doubt in that. So when you're here in the market, make sure you control your risk and you know your risk tolerance. If you're like, okay, that's too much for me, don't do that, because it can play emotionally with you and you may actually lose a trade. You don't really want to do that. Great. If you received value for your time, please do hit that like and subscribe button. I'll meet you guys on the next video. Bye-bye.